one more panel on tax, employment tax and assignments. Ravi, why did you leave? You're coming back, right? He understands the activate. He wanted to get up and walk around. Come on back, Ravi, Kumar. Appreciate you. Oh, that's after. Yeah, one more. That's why we had to do a little activity so we could make it to the break. All right. Abhinandan, Basavanna, come on up. Yeah, Abhinandan is Associate Vice President in Global Tax at Diageo here in Bangalore. Glad you're here. He's an experienced chartered accountant with a demonstrated history of working in tax consultancy. Jyotirmayee, Chaturvedi, come on up. Yeah. Thank you. Yes, Vice President, Talent Mobility at Genpact. Now, where's Gurgaon? Where's that?
Gurgaon is near Delhi. It's the NCR.
Oh, see, she came from so far. That's almost as far as like Electronic City or something like that, right? How long it takes to reach?
We'll have first presentation from HSBC, Nikhil.
Which one? Oh, okay. Oh, okay, well, yeah.
Then we'll start the panel. He's going to present.
And Roohi?
Roohi is also there.
Yeah.
So they will present, then we'll get in the panel discussion. But you can still be seated.
They won't sit with these guys. Oh, they will. Okay. All right. How about Nikhil Singhal from HSBC, the Managing Director and National Manager of Global Private Banking? Yeah, where are you at? Come on up, Nikhil. Welcome. And his associate is Roohi, Ansari, Head of Business Development International at HSBC. Welcome from us to HSBC, from the mobility community here. Thanks for being here. And for sponsoring, and for judging the food contest, although you were afraid to eat the things that were made. I saw that. Yeah. She asked if there were mushrooms. No mushrooms. There were no mushrooms. But did you see Geetha? She was worried. She was like, I hope there's nothing non-veg. She saw something look like a fish or an animal. She was like, okay. Anyway.
We'll first present, then we will sit the panel.
Okay. And so this tax panel, first we're going to start with Nikhil. He's going to give a presentation, and then we'll proceed with panel.
I'm going to join them as moderator with Roohi.
Who will?
I'm going to join them as moderator with Roohi.
Oh.
Roohi can answer the moderator. It's fine.
Okay. All right. No, it's already there. Yeah.
Good afternoon, ladies and gentlemen, and thank you for the wave. It definitely helped bring in some energy into the room. But I must say the panel discussion previously was very good, global mobility, and it actually brings our conversation front and center in terms of what we're actually looking to do. But before we get into the presentation, and I'm promising this to be a very light one, it's not going to be a very heavy dose of presentation, but I think a few key pointers will be important for you to take away. Before I get into that, I want to thank RelayZen for giving HSBC this chance to be partnering with you all for the second consecutive year. We're very happy to be associated as a platinum sponsor for this event, and of course, Roohi worked very hard to put this together with the RelayZen team. So thank you once again for partnering, allowing us to partner with you all. We want to touch up some of the topics which got discussed early on, and as a financial institution which prides itself in serving clients across geographies, I think that's where our positioning is. You may have been hearing a lot about HSBC in India of late. We were always a bank of substance and vintage. I will briefly cover about HSBC in India, but I think it's important for you to know that we've really lived the journey with India over the last 170 years that we've been around, right? So in a way, the bank has actually partnered in the growth story of India. And we all see that evolving in terms of what's happening over the last 10, 15 years or so. I know when we were all sort of go back to about a couple of decades back, and there was this thing about India is finding its way. But I think a lot of that talk now is finding it's kind of coming to fruition. So a quick sense check on where we are today. I mean, we're all talking about India story, but what are the key drivers for India story? And I'm not going to get into each number really, but very clearly the factors around financialization of the savings, the startup ecosystem, which is attracting a lot of capital, the currency stability that we see today, which is getting your FDIs and FPIs, both in terms of portfolio investments and long-term capital is finding its way into India. The whole manufacturing buzz is whether it's supported by PLI schemes, etc. I think they're all becoming big feeders to the India growth story, right? It's visible. I mean, if you see some of the numbers, when I said capital is finding its way into India, it's visible in the remittance numbers. Now, if you look at how India is now, not just attracting FDI capital, but if you look at some of the remittance volumes, the outwards are close to about $30 billion, but the inwards is about $120 billion every year. And a lot of that is now not just sustenance remittance, but actually capital flows, which are less as OPEX, but more as CAPEX to buy properties, to buy investments, angel investing, venture capital, all of that, right? So this is the change landscape of India that we're really talking about. Billionaires, democratization of wealth. I think the other big thing that we're seeing today as a financial powerhouse in India is that wealth accretion is happening at the fastest pace. Wealth accretion also then talks about aspirations. If you look at every upper middle class families and beyond, almost everybody wants to send their kids for overseas education, post-grad, undergrad, etc. It's about the whole lifestyle bit, which is finding its way into some of the banking parlance as well. Household incomes multiplying, which is where I think a lot of the risk-taking ability is also gone up for people, right? And which is where, as more and more corporates are coming in, they're finding Indian talent to be very, very useful, which is the feeder stock for your global mobility stories. So I think clearly some of those elements are there. This is the India story part of it. Now the question here is, how is it that HSBC is going to look to serve the evolving needs for the various segment of clients? And which is where I think it's important, and I'm going to be very brief about this, is to say that how is the bank positioned on the consumer bank side, on the corporate bank side, to be able to serve these varying needs. Now, for the moment, for the purpose of this audience today, I'm going to stick more on the consumer bank side, which touches a lot of you all in terms of what you're finding as solutions for your employees or for your personal needs. But I think the way we've positioned ourselves is that we want to be a comprehensive financial products provider for clients who are a lot more internationally mobile, right? I know a lot of domestic banks probably have a very good coverage, etc. But I think where we've got a strong edge is in terms of our ability to connect people across geographies, across various products, etc., and needs. If you look at some of the stuff around core banking, for instance, I mean, we have a very strong global money platform which allows you to do remittances rather seamlessly. Of course, the regular checking account stories, but the global money allows you to transfer monies very seamlessly across various markets. But more importantly, we've also now integrated within that, let's say, our evolving global education platform, which allows you to make payments to various universities. We've got about 650 universities already empaneled on that platform. But literally geography agnostic, literally university agnostic, and we're constantly evolving on those platforms. In terms of a very strong consumer lending platform, if any of you have been tracking concerts, and I know Bangalore can be a very active market on that, it is the only card which is giving you the best offers, right? So believe it or not, it's a FOMO story, right? And it's just going to double down. So HSBC's plans in India are very simple. We want to be the leading international bank for the affluent, the ultra high net worth and the high net worth segment. And we want to serve our corporate clients very well, not just for their corporate needs, but for the employee needs through our employee banking solutions. So that's the broader agenda of how the bank's positioning itself. In terms of the wealth management, this is our forte, right? This is what we pride ourselves in, because we've got seasoned relationship managers who serve you across the continuum of products. You want to get into venture capital products, you want to get into PE funds, you decide your risk appetite, we'll have the solutions for it, right? So that's largely how the platform is here. In India, I think it's important for you to know in terms of our scale and size. In India, we make close to about $1.2 billion of PBT as HSBC India, which is within the HSBC group, the third largest PBT contribution. So it's a very significant in a scale market, and a lot of the announcements that you've seen in the last couple of years are talking about a very strong growth agenda. Most recently, there was an announcement also about us expanding into 20 new branch licenses which have been approved by the regulator. Okay, international story for us. This is where we are into. I'm going to connect to the previous panel discussion conversations, which spoke a lot about global mobility and the evolving challenges. We have prided ourselves in always looking at solving for issues. I mean, whenever we've heard about the whole startup ecosystem, the success mantra for them has always been find a gap in the journeys, consumption journeys, etc., and plug it. That's what is a sustainable, scalable story. Our basic objective has been needs fulfillment. As long as you see a gap and you're able to solve for it for the consumer, that's the best and a sustainable solution. With that mantra, we've actually looked to solve for global mobility issues, basis our conversations with various corporate CXOs over the course of last 4 or 5 years. It is a difficult journey, right? Because you are doing a handoff across geographies. There can be an element of limited control. There can be an element of cross-border guidelines. You've got to be very kosher in all your conversations, in all your discussions. But there are ways to still handle that, and which is where our international presence across multiple geographies, I think we're there in about 55 countries today. It's not easy to run a multinational setup in today's world where regulations can be very significant. But I think this is where our strength comes in, because we're very strongly proud of our franchise. We are able to set up, for instance, if I look at the mobility aspect, we're able to set up accounts for people in 4 hours. We are actually running this as a mission. Today we do about 65%, 2/3 of the account opening within 4 hours. We want to take it up to 100%. This is being tracked at a country management level, right? Idea being, we want to serve this really at a faster tack. We're able to set up accounts for you in your future country, host country, before you even land there. Now, some of those regulations will change will vary from country to country, but that's the objective, that you have your account and deliverables set up before you even land in the country. Now, I can actually relate this to a personal anecdote. When I worked in in another organization actually, in London, and I moved, and my salary account was going to take about a month and a half to open in the same bank. The ways of working of various countries can vary, and they have certain different ways. I mean, we're used to in India where things get done in 3 to 4 hours. It may not necessarily be the case when you move to a different country, right? That's the problem we're solving for. When you land in a different country, you anyways have a lot of adjustment issues. You need monies for upfront, brokerage, rents, all of that. So there is a genuine issue, but a lot of which we're able to solve for if you've got everything handy. right? So that's the issue number one. Credit portability sounds easy, but if we can make your credit history portable in another country where nobody knows you, you don't realize, but it's a huge value, right? Corporates solve for this through another mechanism, which is SBLC. So in country, you're a big player. New country, nobody knows you. You use the SBLC route to establish your credit portability. We're doing this for individual clients. Your credit history in India gets recorded elsewhere and vice versa, right? So that's a big industry first in that sense. Sending money abroad, absolute on the click of a button on your mobile. We've got this really good technology around global money, which allows you to do that. Within that, like I spoke about briefly, we've built the global education platform. It is going to be our biggest agenda item where with international students migrations, India is becoming the biggest in terms of STEM students going overseas worldwide now. You got to make life easier for parents. You got to make it cost efficient for parents. So we are actually investing in this more as a solution provider for our clients, parents, etc. Right? Plus, once you're there, you're going to get the full suite of banking products. Once you've landed in the host country, you get to retain your benefits of your accounts in India, depending on the platform. Now this again, we serve across the continuum. So you're going to have a corporate account solution, but you can also look at our affluent segment, which is served through Premier, which is at a $50,000 threshold. But if you want to scale up, and depending on the size of the wallet, we have the high net worth segment, which serves the private bank clients, right? So really, across the spectrum, we've got the platform to serve our clients. Interestingly, there's a lot of stuff that we're trying to do. Future planning, again, this is connected to the whole things around succession planning. How do you want to do portfolio investments, top-of-the-line wealth platforms, analysis, all of which is available depending on the segment you want to operate in. And you choose how you want to, what scale you want to operate with the bank. But that's our forte, to be honest, right? And lastly, beyond banking. I mean, we spoke briefly about the concerts, etc. But there's a lot of other aspects which become very critical. Parents back home, your investments back in India. I mean, you move overseas, but you could have real estate investments already there, rental incomes coming through, a lot of which we are able to support through various banking solutions. Get that invested also gainfully on a regular basis. Your coverage is across markets, of course, falling within the rules of engagement of various jurisdictions, because you've got to be mindful of the cross-border rules. But our objective is very clear. The monies in India are managed professionally through relationship manager support in India, and the monies that you're going to earn overseas are also looked after based on your requirements in the host country. Taxation, we've got tie-up with EY, happy to support preferential pricing. We are not tax experts. We don't claim to be one. Neither are we supposed to give any advice. But we've got these tie-ups. We are, by the way, working very aggressively on some of the new ventures which are at a country level new. Gift City, for instance, is going to be a big thing for us. HSBC is at the forefront. It's probably, we were the first few banks to have set shop in India, in Gift City. And now we've got a scale corporate bank business, but on the needs of the individual investors, we've gone live. And we are able to serve our non-resident clients on this space as well, with preferential deposit pricing. Property management, we've got a tie-up with India Assets, so they can advise you on properties that you want to sell, buy, etc. Again, the benefit from HSBC is that you get preferential pricings on this. Concierge services, lifestyle, I spoke. I mean, the card, if you've been tracking in the last 4, 5, 6 months, we've gone very specific in terms of, based on your lifestyle, you choose your card products. So the bank is going to be very clear in terms of providing you true to segment benefits straddling across geographies, across kind of products. So you want to be engaged on the liability products or the wealth management products versus the asset products. I think those opportunities are very much open. So meant to be a very wide platform, meant to serve your needs and in the bargain let you explore the wider platform as well. But I think these were the only initial thoughts that I had. But again, thank you so much for giving us this opportunity to address all of you and be happy to be part of the panel discussion. Thank you.
Thanks, Nikhil. That was a wonderful presentation. We want to go first. I think still have ample time. I think we'll have about 10-12 minutes to do the panel discussion. Maybe then we'll jump into the Q&A. Want to go first
I
with?
think this is going to be an interesting one and something which each one of us as individuals also look forward to. I'm sure most of you are wondering why we as a banking partner are here at the panel. Well, apart from the obvious gold sponsors, but I think it's also because everything and anything pertaining to mobility, taxation, internationalism altogether, we as a global bank are here to tie them together. Yeah, so we'll quickly start, I think, with the first question. Which are the top 3 challenges from a taxation aspect that you would call out, Ravi or Jyoti or Abhi, any of you?
From a mobility point of view, when it comes to tax, I think the fact that there are taxes arising in different parts of the world that need to be paid, and most of these, or most of the times, the company is responsible for making these taxes. So just tying the previous part to this question, I would say making those disbursements in different parts of the world, although the agreements may have been made elsewhere, could be one of the top challenges when it comes to tax, banking, and mobility as a combination.
Thanks, Ravi. Just, is it fine?
Yeah.
Fine? Okay. Rather than speaking...
I think you need to hold it close.
Is it fine now? Okay. So, rather than speaking more from my industry, let me just speak what are the challenges that we face internally as a tax team. It's partnering with global mobility team. Okay? Because, see, tax, most of them, as you see in an organization, if you see where the tiff is, it's between tax and global mobility teams. Global mobility team generally wants to send people, but we, from a tax professional, we always say no. So how do we break the ties? I think that's the first step where we need to tackle. Because in an organization, we understand, retaining talent and all that is important, and how tax is also parallelly important. So how do we draw a line wherein we as tax team are comfortable and we are also similarly supporting global mobility team to keep circulating the talent? So I think that's one of the challenges as tax team we face. So that's from me.
Thank you so much, Abhi. And I think I'll take clue from there. Perhaps my organization understood that, and therefore global mobility has tax as a sub-function within it. So we kind of diminished that line. But talking specifically tax and global mobility put together, I think the top challenges would be in terms of compliances for business visitors, remote workers, and a new category coming of gig workers. I think those 3 categories, they continue to pose challenges for us.
Sorry, before moving to the next question, I just want to add a point here. People who attended our conference last year know that most of the point was more about immigration. But this year we made it a kind of mandate that we should not just cover immigration, but also mobility. In fact, we wanted to get some travel partners as well, because all these are interconnected. Whether it's talent, mobility, immigration, tax, banking, they're all interconnected, and it does touch upon an individual's personal lives as well. So hopefully we'll expand the portfolio next year. But I'm glad that we have mobility folks, the tax folks all sitting together, and then probably praising plus bring back together. But ultimately, we should all work towards one as a dedicated team down the line. Hopefully, this would be the good start for all of us. Yeah, thank you. Moving to the next question. what I'd like to know is, see, earlier, previous session, we talked about different kind of assignment structures and has its own challenges. Like in terms of your thought process on how does assignment structures have an impact on either tax or social security, what are those challenges and how do we address them?
I think I'll begin first. Traditionally, we've had the assignments which were categorized into long-term, very long-term, short-term. But after COVID, I'm sure it's true for everybody, we're seeing a spur in the count of people requesting for remote work. And then there are different country combinations that are coming up where people want to move on for assignment. The added challenge is that there's an element of sporadicity in their travel. So if, let's say, somebody is traveling from Canada to the US, they want to spend 1 week in the US, go back to Canada, and then come back, let's say, 2 weeks later. So without any defined frequency or rhythm. Now, in both these kind of, if you want to call them assignment structures or travel patterns, the challenge is in terms of tracking employees. Because there's no set rhythm. How do you make payments to them? How do you ensure there's an appropriate cost cross charge? How do you ensure that if they are residents in both the locations where they are tie breaking, how do we make the compliances? And the list can obviously go on. When it comes to remote work, again, the challenges are threefold. Immigration, do you have a work authorization? Where are you traveling? When you're staying for long, are you really hitting the P benchmark and you'll create a permanent establishment risk? And then thirdly, obviously, personal taxes. So from a remote work perspective, I would say it's more about your guidelines. What's the risk appetite? How does the organization want to view it? I think we heard from Lakshmi and Ravi earlier. As an organization, we have guidelines where we only allow employees to work remotely from their home location. So immigration aspect is cut off, personal aspect is cut off. We are only trying to now target the P challenge. And when it comes to the sporadicity, I think the challenges remain. We are just grappling with it.
Ravi, any thoughts?
I think that's the right point to mention, Jyoti, because in this aspect, we as an organization are a little different from you, because we have partnered well with Global Mobility just to encourage more of remote working. So somebody asked what is the guidelines that you have and things like that. And sometimes organizations are not very vocal about it because tax is very stringent. It says 1 day social security has to be contributed, tax you have to do it, and things like that. So it's basically the risk appetite of the company. So you can't say or can't compare organization to organization, but as industry, shouldn't we actually be promoting it? Because as governments, I think we didn't touch upon digital nomad visas and things like that, right? Because forget company, countries are actually trying to promote global mobility, try to bring talent from other cities, try to boost the economy through travel. So when a country is doing it, we as a company should somehow focus on it. And as tax team, I was almost 10 years in consultancy, and we are always used to saying no. That's why most of you, when you ask questions to tax team, they say no. But this is the other side of the world, right? We are sitting in this side. So you need to see, okay, what's the risk appetite of our company? What are they willing to do? So as global mobility partners, I think you should ideally channelize it more with the leadership team, along with the tax team, to say we should increase our risk appetite. Probably consider 20 days, 50 days, that where we can, we are willing to take that risk. So I think that is where we tied up with remote working, and we are quite liberal to allow people to travel for 20 days for personal reasons, where we have certain restrictions, like they should not be visiting the office in the host country and not do any kind of decision-making, things and things like that. We have restrictions, but we do promote. And sometimes, I think Lakshmi mentioned it, it depends on country to country as well. And if some countries allow people to be there up to 50 days or up to 90 days without much of a P risk or a tax risk, then we encourage that as well.
We spoke about it from the different perspective of policy, but when you start looking at it from tax, this is the very reason why you need these policies or you need these frameworks, right? There is no one answer. Some companies would say 20 days, some companies would say 25 days is where we are comfortable. it's all about the risk appetite. It's all about how necessary is it for you to take this risk, and a little bit about what kind of employee population are you working with, what kind of industry are you in. It's again a matter of policy coming into tax or tax going into policy. So nothing new to add.
So thanks for that. Jyoti, I'll take a cue from what you just mentioned in terms of keeping a track of the employee and the taxation bit. And to also, I'm sure security is one of the major, concerns here when we speak of different structured assignments, right? Having said that, to facilitate some transactions like this, Nikhil, your thoughts as a banking partner globally, the way we facilitate such transactions on different types of assignments where an employee may move to the payrolls of an overseas entity completely, or sometimes in some assignments, they may continue to get their payroll in India and per diem overseas. Right, the taxation is something, one is definitely the awareness part, but in terms of facilitating it through our right banking channels to ensure and comfort them from a security perspective. Your thoughts?
Thanks. No, I briefly touched upon it in the presentation that I made. See, as a banker, my role in Remit is quite clear. I'm not going to be on the tax part of it, but and that's relatively easier life in that sense. But I think we're able to help you set up your infrastructure, both in country and the host country that you're going to be in, right? In country, I mean, I know, hear it from the team that a lot of the doubts people often have is in terms of why can I not just continue with my resident status here and then don't need to convert NRI, NRE, NRO accounts? Why do I need that and all? I think there is a lot of misinformation that often is there. So our job as a banker is to then say that, okay, this is how you're going to change your local earnings come into your NRO account, your overseas earnings come in a certain different manner, different elements of repatriability, et cetera. Often there is a lot of issues around how much you can take out monies from your current income versus capital income from India to overseas, because a lot of people want to buy assets when they moved. Over the next 2-3 years, their first port of call typically tends to be to lock in a home or something if they want to settle down there. And they want to sell some of their properties and move out, and there's a whole lot of these issues that happen around how much am I allowed to repatriate and all of that stuff. So I think that's where our role as a banker comes in. The other bit that you spoke about, and of course, like I said, our biggest bit is about before you even land there, how comfortable can we make you in terms of your ecosystem around banking. It is not about setting you up for wealth management and all of that, but it's only about making you comfortable in a new host country in terms of your banking arrangements getting fully kosher, set up, and a linkage in terms of flows in and out of country are all set. And after that, I think that basically in our own vested interest, it actually sets us up for a more meaningful conversation through your journey in both the home country and the new host country, right? So I think that's how we've positioned ourselves. And again, like I also mentioned briefly, this is one aspect of it, and then we're also trying to say that given the increase in various types of movements which are happening, one for corporate requirements, the mobility part, the other bit, like I said, a very aspirational Indian student community, which is fastest expanding and across geographies. I mean, it's not just the US, it's a Canada, it's in Australia, it's a UK and a UAE corridor. I think we're just plugging for various sets of requirements which make life very, very easy. Again, as a vested interest for the banker in us, we want to capture them young, we want to play their growth story through and through, both in our local country and the host country, right? So that's how we're trying to play the story.
Thanks for that. On that note, actually the question is first to you, and then I'll let Nikhil elaborate a little more on that. How confident are you in terms of your employees being aware of the change in the tax obligation when they relocate to a new country on long-term visas or longer assignments? And what are the challenges or questions that come your way? Are you confident that your employee is comfortable in terms of his taxation bit in India and in the destination country?
More than confidence, I think I would call it duty of care. When, as an employer, you need your folks to travel to another country and work out of there, it becomes your responsibility partly. And this is where your partnership with the tax vendors comes in. We make sure that people are provided with enough support for them to be able to, let's say, be compliant. I'll break it down. Probably assignments that are more limited term, you make sure that they are compliant throughout. And when you depute people, when you move people permanently, you provide them enough support for them to be integrated into the tax system of the new country. So more than confidence, I think it's a lot more about duty and responsibility. So I would look at...
Especially Ravi, you, right? I mean, you deal with seafarers as well, right?
Yes.
Maersk. So it would be two completely different segments or population and difficult from a taxation standpoint as well.
So if you look at mobility per se, while seafarers we don't call as mobile population, although they're mobile population, that's more a necessity of the business to operate, versus the folks that we move from one country to another country on assignments due to talent gaps, skill gaps, etc. So while the organization looks at it differently, I think it all falls under the same bracket when it comes to compliance. And there is this need for us to rely on experts. So it is more through the experts that we gain that confidence. Yeah.
Interesting. Jyoti, your thoughts?
I would say, I think no matter how much you prepare the employees, there'll be certain element of skepticism that will always stay. It's like you reading a new chapter versus a chapter that you learned for like ages together. So there can be the level of confidence between their knowledge on India taxes versus overseas taxes cannot really match. But the idea, like Ravi said, is to prepare them well and provide them that hand-holding through vendors throughout the tenure of assignment, so that they as employee do not feel left out or are not really fending for information, and we as an organization are able to ensure compliance in all respects.
And how different is it with the foreign nationals when they go back?
So we really don't have much of an inbound population, but it is certainly one piece which is very critical with the foreign population moving between two geographies, which Indians typically don't do. I don't know for what reason. They tend to compare their net take homes without keeping into consideration the cost of living, etc. So I think that's a challenge that you always have to cater to and explain them, that differential in tax rates, social security obligations, cost of living, because if you expect the same kind of compensation, that becomes a little tricky.
Abhi, you have any thoughts?
No, I think making the best use of the consultants is the best solution, is all I feel. And for that, we as internal tax teams do not get that opportunity unless the questions come to us. And for that, we have very good partnering within our company. We changed a few things where we requested global mobility team saying that, let's just try to reduce cost in the first perspective, but also try to get in-depth knowledge internally. So before you reach out to consultants, if you feel we can solve it internally, why don't you just pose the questions first to us, whatever tax aspect it is, and we'll try to solve it for you, because it's easier to speak within the company, because we'll not be telling you stringently that you should not be doing that. When you go to a consultant, it's more of no's, but internally we are more of, okay, yes, we can try and things like that. So I think depending on the internal tax team first, gives you more comfort than approaching consultant in the first place. If you're not able to solve, then approaching consultant makes sense, is all I feel.
Nikhil, your thoughts?
So I think this conversation will change again, like I said, when it comes to the role of a banker. But in terms of information asymmetry, I do feel it's very high. And our role gets a lot more pronounced when people are talking not just about, see, because we are not connected with a salary level taxation, etc. But I think our role as a banker will be more pronounced when it comes to their impact on capital gains. When you've got investments running here in resident, they get converted to non-resident. Elements around ESOPs and RSUs, etc. I think that's where our role will become a lot more pronounced. And our port of call here is generally to seek professional advice always. But if you ask me in terms of the gap, I do think that there will obviously be huge understanding gaps. I mean, each country has a different taxation. UK has regulations in a big way around what you can do when you're onshore versus not. Please remember, there's a huge interest from all the people who move out of India today are not breaking their connections with India. Their bulk of, given the opportunity, and this is the big shift that I was briefly hinting at in the presentation. Earlier, the monies which used to come back to India were sustenance money for the families. Now it's capital monies. You're investing that money actively because you see a bigger delta in this market. You're earning in another market. You're doing your sustenance in that market. You may be just buying a house, but a lot of that money finds its way into land, properties. I mean, the biggest builder shows first now happen to NRI windows overseas, right? Rather than in India. Some of the big developers first do road shows in other markets, and they pick up some of the big inventory outside itself, 25% of that. So there is capital flows coming in. That will have different tax implications if you're, let's say in the UK, if you're a non-dom versus a domestic, domiciled there, etc. So variations, but not a banker's remit entirely. Our objective is always to tell the clients that they should seek professional advice based on their circumstances, both for their earnings in India and for the funds lying outside. But like I said, it's less to do with the compensation part of it. That's not going to be our remit, but in a big way around how the investments taxation treatment tends to happen. Yeah.
I have a question. I want to turn the tables on the sponsors. A lot of countries have introduced a need for people to report certain things in their tax returns beyond income. Say certain transactions, certain assets held outside India and things like that. As a banker, your banker might be privy to a lot of that information. How much is, say, HSBC's focus on making available such reports so your clients are able to report them a lot more easily, or do you have solutions around that?
Beyond my peak, did you want to answer that?
Sorry, I'm not very clear. What reports are you talking about?
So let's say, reporting your financial assets, reporting your bank balances across countries.
Across countries?
Yeah.
I don't think, I'm not really aware of any.
I'll just probably simplify his question. From a tax perspective, it might be easy for us to say this. So there are certain regulations in the tax return these days where we need to report all the foreign assets, foreign investments, those kind of things in the India tax returns or the returns over here. And if we don't do that, then there are certain implications that the government imposes. And it's difficult for a service provider to get that information directly from the, say, employee, so that they have to report all that. And they try to figure out, reaching out to various people to get all that data. So as a banker, what Ravi is trying to ask is, do you plan on implementing any such things where it is easier, where the employee directly reaches out to you and asks you that, see, I need to report my foreign assets and investments. Can you just give me a report? And all of that comes in just one report. So do you have any role to play in that, I think is the question.
I don't think I can take that as I can answer that because I think you're basically talking about in the India tax returns, if you're supposed to do the reporting of your offshore assets. So I think this could be across 2-3 banks, right? So I can't anyways have information of your accounts in the other banks. What you're supposed to do is a self-declaration, but I don't think...
I agree with you largely. It's not very broad-based. simple things like, I need a report for this period, which may not be the period for which you generally generate, let's say, statements. I need a balance as on this date, which may not be very easily available at times. And these are very small issues that come up. Now, if you're a banking partner who's focused on mobility, who's focused on folks moving across borders, I think it's that one step of saying, hey, what are the downstream challenges that you end up having in terms of reporting? And see if it's a very simple fix for someone who holds that information versus something an employee needs to do.
Let me just help close this conversation for a moment to say that if you're talking about an offshore or overseas money, I will not have access to that data. So this is, let's say, money in another jurisdiction is only known to either the client who holds the assets or the banker in that market. This is not a freely circulated data. Let's say I may have access
I was just
to any
referring
other
to
market.
within
So
HSBC.
it is going to be an absolute, no. So in the sense, I will not be able to even see accounts of another market. And that's the basic rules of cross-border engagement, that you have to work in a very hands-off approach. And you can't really access the data of a different market. And that's the onus of the investor who holds the client assets and not the banker. So that's the way we look at it.
I think we're running out of time. Jake, do we have time for one more question, or should we wrap?
Hey, one more question? I'm hearing
Okay, I think
tea break?
the audience wants to have tea. Maybe,
break.
Okay, then we'll take a break. Thanks to all the speakers. Wonderful session. Quite
All right,
insightful.
thank you.